Hey, it's Matthew Rice with Fairway Independent Mortgage. I wanted to take a moment to address qualified mortgage and explain a little bit about what's going on in the marketplace with that today. QM, qualified mortgage, is part of the Dodd-Frank legislation that went into effect Friday, January 10th. Some new rules, some new guideline tightening for lenders for any loan that is eligible for purchase by Fannie Mae and Freddie Mac. First off, I want to say that I believe the impact of this won't be nearly as detrimental as many have made it out to be. There's been forecasts that as much as 20 to 25% of all loans will no longer be eligible due to these new regulations. I don't see that that's the case. Here's the scoop. There's two parts of this legislation. There's a fees cap. It varies by loan amount, but basically certain fees charged by the lender are not allowed to exceed a threshold. For instance, loans over $100,000 are not allowed to have fees that exceed 3%. And that varies a little bit as the loans get smaller than that $100,000 mark. Second aspect is debt-to-income ratio. There's now a maximum debt-to-income ratio of 43%. Personally, I have faith that everything here is going to be fine. As far as the fees cap goes, it's very rare that the specific fees that are involved here actually exceed 3% anyways. It's not a huge percentage that gets into that threshold that becomes ineligible. Secondly, the debt-to-income max. It does allow for some exceptions for your stronger borrowers that have compensating factors. So that's important to note. It's also important to note that government loans don't follow these same threshold, these same debt-to-income maximum. So your FHA, your VA, your USDA loans are basically business as usual. So all in all, I think it's not as a significant impact as many have made it out to be. The best evidence that I can give of this is that within the Fairway network, almost 180 branches, just shy of 180 branches nationwide. You look at all the loan production for this past year, 2013, the number of loans that would not qualify under this new guidelines for QM is 3%. So only 3% of all the loans that we did would not qualify under this new guideline. So that's significantly less than the 20-25% as many forecasts have indicated. So there is a bit more back-end work for the lender, but overall I think it's going to be minimal impact for the borrowers. If you have any questions on this, give me a call, 770-490-9866. I can help further and look forward to talking to you soon. Thanks.